Hey, welcome. So you open your phone, you turn on the news, and you're just bombarded with these global headlines, right? Conflicts, trade disputes, political shakeups. It can all feel pretty overwhelming, maybe even a little distant. But what if I told you that all those events have a direct line straight to your bank account? Today, we're going to connect those dots.
I mean, it's the big question, isn't it? A lot of us are asking this right now. You see a headline about some instability happening halfway around the world, and there's that little voice in your head that wonders, okay, but what does this actually mean for me? For my savings? For my future? That anxiety is totally real, and today we are going to tackle it head on.
All right, here's our game plan. First, we're going to break down what this geopolitical risk thing even is. Then we'll get right into how it actually impacts your finances. And most importantly, we'll walk through some real, actionable strategies to protect yourself. Everything from your investments to your emergency savings, it's all about building a more resilient financial plan. So, let's kick things off with the basics. This term, geopolitical risk, gets thrown around all the time. But what does it actually mean? Let's strip away the jargon.
At its heart, it's really just about how politics and the relationships between different countries can create these ripple effects that mess with the global economy. You can think of it as the financial uncertainty that pops up whenever nations aren't playing nice. And that uncertainty, it can seriously rattle markets and shake up economic stability all over the world.
And believe me, this isn't just some textbook theory. Think about those trade disputes that suddenly made electronics way more expensive, or how conflicts in Eastern Europe have had a huge impact on global food supplies. And you've definitely felt it at the gas pump when there's instability in a major oil-producing region, right? These are all real-world, in-your-face examples of geopolitical risk.
Okay, so we've got a handle on what it is. Now for the part that really matters. How does some event happening thousands of miles away actually reach in and affect your personal finances? Let's get into it. Well, it really hits you in two main ways. First, there are your investments. Global markets absolutely hate uncertainty. So when a major geopolitical event happens, you can see stocks go on a wild roller coaster ride. Your 401k or your investment portfolio can feel that heat almost instantly. And second, it's your daily costs. When conflicts mess with shipping lanes or trade routes, the whole supply chain gets squeezed. And what does that usually mean? Yep, higher prices at the grocery store. Suddenly, your paycheck just doesn't stretch as far as it used to.
And yeah, the connection can be incredibly direct. Just think about the price of gas or your home heating bill. When international tensions flare up in energy-rich parts of the world, crude oil prices can skyrocket. And you see that impact clear as day every single time you fill up your car or open your utility bill. It's a very real, very tangible hit to your budget.
This is the million-dollar question, isn't it? When the markets are dropping and the headlines are getting scarier and scarier, that gut reaction for so many people is to just pull their money out. Just sell everything and run for the hills. But is that really the right move? Here's the thing, and it's so important. Reacting based on emotion is almost always the worst thing you can do for your finances. When you panic and sell, you take what was a temporary on-paper loss and you make it permanent. You've locked it in for real. And what's even worse, you're probably going to be sitting on the sidelines when the market eventually recovers. History shows us over and over that markets bounce back, and you have to be in it to win it, you know? So, if hitting the panic button and selling is off the table, what should you do? Well, this brings us to our first major strategy. It's all about building a strong defense before a crisis even starts. And the name of the game is diversification. You know the old saying, don't put all your eggs in one basket? That's literally all diversification is. First, you spread your investments across different kinds of assets. Things like stocks, bonds, maybe some real estate. Second, you spread them out across different parts of the world so that if one region is having a tough time, it doesn't sink your entire portfolio. And finally, you rebalance from time to time, which is just a fancy way of saying you check in and make sure your mix is still where you want it to be. It is the bedrock principle for stable, long-term growth.
Now, this is a really key part of that diversification strategy. During times of turmoil, investors often rush to what they call safe haven assets. These are investments that are expected to either hold their value or maybe even go up when everything else is tanking. Things like gold, government bonds from really stable countries, and certain currencies, these are the classics because they just don't move in lockstep with the stock market. Okay, so diversification helps protect your investments. But what about your actual day-to-day life? Because job uncertainty can spike during all this economic turmoil. That is where your financial safety net comes into play. The big goal here is to have a really solid emergency fund. The standard advice is to have enough cash saved up to cover anywhere from 6 to 12 months of your essential living expenses.
And listen, this is not investment money. This is your buffer. It's the cushion that lets you ride out a storm without having to sell your investments at the worst possible time or go deep into debt.
And where you keep this cash really matters. It absolutely has to be safe and easy to get to, so not in the stock market. A high-yield savings account is pretty much the perfect spot. It keeps your money liquid, meaning you can grab it fast if you need to, while also earning you a little bit of interest, which is way better than just letting it sit in a checking account doing nothing.
All right, we've defined the risk, we've looked at the key strategies. Now let's pull it all together into a clear, simple action plan that you can use to build your financial resilience for the long haul.
So what's your checklist? It's actually pretty straightforward. Number 1, diversify your portfolio across different assets and different regions. That is your absolute best defense against market craziness. Number 2, build and maintain that emergency fund, that 6 to 12 months of expenses. It's your personal safety net. And 3, don't ever be afraid to get some professional guidance. A good financial advisor can help you customize all these strategies for your specific situation.
At the end of the day, we can't control world events. Geopolitical risk is just a fact of life in our interconnected world. But what we can control is how we prepare for it. By focusing on diversification, having that emergency fund ready, and keeping a long-term perspective, you can build a financial plan that's ready for whatever the headlines decide to throw at it. I really hope this helps you get started. Thanks for tuning in.